So I know you were listening into our segment earlier where our guest Wesley Chan said he called the top and that the bottom is even farther down from where we are now. What's your reaction to that?
Look, hey, Emily, hey, Sonali, great to see you both. Wish it was under better circumstances. Everyone's been calling Bitcoin top since the beginning of Bitcoin. I've been in this industry professionally for 7 years. One trend that's not going away is we continue to see higher highs as well as higher lows. Even at current prices around 20,000, we are still above previous all-time highs in the last cycle. We tend to see 80 to 90% drawdowns. This is a volatile, highly cyclical asset, but the secular trend is here to stay. At CoinShares, we continue to invest in great technology businesses that are changing the world for the better, that are generating fantastic returns for investors. So look, I think it's a matter of time. Last year, crypto commanded 5% of all venture dollars. This year, we're looking at around the same, if not slightly higher. So I think crypto is here to stay, but you know what? The proof is in the returns. So we'll see what the future brings.
You know, a lot of people are looking at that $20,000 number, but, others are saying the right number to look at is $19,511, the high that Bitcoin hit during the last bull cycle in 2017. Is that the right number to watch for? And if we get below that, which we're very, very close to, how bad a sign is it?
So look, I'm not tethered to a specific number, not to use the phrase tether, which might raise some alarm bells. Today, I had to work in a little crypto pun. I'm not so concerned about that previous all-time high number. What we're looking for is we're looking at key liquidation levels. So we're seeing a lot of people, just given the structure of debt in the crypto market, you have to over collateralize. And given these markets trade 24/7, 365, you can get liquidated in an instant. There is no grace period. There's no 2-week margin call like Archegos had when they were insolvent. And so what we're looking at is key liquidation levels. And then the other key numbers to look at is, again, that drawdown from peak to trough. So the last cycle, we saw an 85% drawdown from peak to trough. This cycle, the high was around 69,000. So an 80 to 90% drawdown would put us between 7 and 14,000. So right now we're at about a 70% drawdown. We could go a bit lower, but we're seeing strong support around this 20K number. And we're seeing liquidations have slowed and forced spot selling has slowed as well.
Speaking of forced selling, this idea of three arrows and worries about other funds in the industry, the problem about funds facing trouble is more liquidation. So the question I have for you too is, how systemic can this get? How can some issues beget more issues here to kind of create some of those drawdowns that you're talking about?
Yeah, and I think, Sonali, that's exactly the challenge here. One of the great issues in crypto is there tends to be an asset liability mismatch that happens whenever there is a drop in price. There's more collateral that needs to be posted to keep some of the leverage in the system. And again, positions tend to be over collateralized and can be called and even force liquidated at any point in time. So what we kind of see is this vicious cycle where your liabilities decrease in duration. So what you may have perceived as a long-term liability becomes a short-term one. You need cash. And then what we have on the flip side, if you're investing in venture and some of these long-term locked up investments, your assets are more long-term assets. You don't have as much short-term cash, or those short-term saleable assets you have declined 40, 50, in some cases 90%, or in the case of Luna, 100% in value. So you have this mismatch that gets exacerbated by the fact that there is no duration on debt in crypto yet. And so again, this tends to lead to this recursive pattern where margin calls lead to people spot selling, which leads to falling prices, more margin calls. So what we need to see is for this forced spot selling to stop before we find some stability here.
This is a pretty pivotal moment. It's been a very steep drawdown, as you had mentioned. What's the wake-up call here? What are the things that people are flocking to that are longer-term projects in nature that are maybe safer to make it through this crash?
Look, for us at CoinShares, we manage billions of dollars in assets. We trade in markets. Risk management is the #1 principle. The fundamentals of finance don't go away just because we're in a new asset class. So managing your liabilities, managing your assets, managing duration, really important. Risk management is something we tend to forget about because you don't need it as much when numbers go up. But now that the number's going down, I think we're seeing who hasn't been managing risk and so number one will always be for trading of any type, markets of any type, just being really cognizant of the inherent risk you're taking in your business model with your positions, making sure you manage that risk. The added wrinkle of crypto is there is this really interesting structural change in the market because all these assets are on-chain trading 24/7, 365 with instant settlement. It adds a lot of pressure to markets in times of volatility. And then the second component that's sort of a new wrinkle is there's obviously technical risk in a lot of these DeFi or on-chain protocols where all of a sudden, instead of interacting with lawyers and bankers, you're interacting with smart contracts. Right. New frontier, a lot to figure out. A lot of folks building solutions in the space that don't require a token. At CoinShares, we're continuing to invest. We're continuing to collaborate with great partners who are building excellent solutions to manage risk, to manage margin, and to manage some of these new technical risks in new and innovative ways. So excited to continue doing that, bull or bear market.
Are you continuing to hire? Because we're obviously looking at these 18% layoffs at Coinbase. Changpeng Zhao, the CEO of Binance, had a tongue-in-cheek tweet saying it wasn't easy saying no to Super Bowl ads, stadium naming rights, large sponsored deals, but we did, and today we're hiring for 2,000 open positions.
So at CoinShares, we are not firing. We have slowed down our pace of hiring. I think one of the important things to keep in mind, I think Coinbase actually from a risk management perspective and a balance sheet management perspective is being very prudent. On average, Coinbase is generating about $1.6 million of revenue per employee prior to these cuts. With revenues going down, they obviously want to preserve profitability. That's a metric we look at CoinShares as well. I don't think we've seen anywhere close to the bottom of cuts. We're going to continue to see more cuts in the publicly listed companies as well as the privately listed companies. And I think the other thing we will see is a lot of companies are relying on SPACs and PIPEs and all of these deals to try to go public and get some liquidity. I think we're going to see a lot of pressure on that going into Q3 and Q4 as well, which is going to change the hiring environment significantly.